Welcome. Today is May 18th. I'm Jeff Huge, Chief Investment Officer at JWH Investment Partners and editor of Alpha Insights. And this is your Daily 5. Today, we're going to start with a little visit with the relatives, if you don't mind. We spent some time over the weekend digging into relative strength on a sector basis. So our first chart today takes a look at some of those conclusions. What you're looking at right now is sector leadership on a relative strength basis using relative rotation graphs. This is a tool that's available in your StockCharts kit and effectively gives you the ability to rank each sector. Now, we do it two different ways here. We do it on a cap-weighted basis, which is the chart on the left, and on an equal weight basis, the chart on the right. And the conclusions are not that different. What we're seeing is leadership out of three sectors, in particular, real estate, industrials, and materials. What we're also seeing is some weakness emerging, even though we still have strong relative performance out of energy, financials, and communications. Those sectors are starting to deteriorate in terms of their momentum. So the momentum of that relative strength is starting to deteriorate. What we're also seeing is some improvement from a few sectors in the defensive space, particularly utilities and staples, but also healthcare is beginning to make a comeback. But right now, what we want to do is we want to focus on stocks that have the ability to outperform. In other words, produce positive alpha. We publish a research strategy publication called Alpha Insights, and that publication is 100% dedicated to identifying opportunities to outperform the market. And so in this case, we're going to focus on opportunities in the leading quadrant here. So within that quadrant, we've identified two of those three sectors that are actually accelerating in terms of their relative strength momentum. And what we've chosen to do is focus on the equal weight exercise. In other words, we're looking at the groups on an unweighted basis so that we don't have some of the mega cap stocks influencing the performance of the sector in general. We want to look at the sector on a broad-based, from a broad-based perspective in order to determine that there actually is strength across the board, not just in a few issues. And what we're seeing is that materials are accelerating and industrials are accelerating. And so chart number 2, we'll dig a little bit deeper into industrials relative to the S&P 500. So industrials versus the SPX. And we're looking at it here again on a cap weight and an equal weight basis. And what the graph really represents is if it's rising, then industrials are outperforming the S&P 500. And if it's falling, then the S&P is outperforming industrials. So what we're seeing here is that in both cases, industrials are outperforming the index and they're making new 52-week highs. That's what the blue channels on the outside of the graph represent, 52-week highs and 52-week lows on the opposite end. And so when we're making new 52-week highs, it gives us confidence that momentum exists there. And we've got a lot of demand for industrials from institutional investors. What's really impressive about this chart, especially the equal weight chart, is that it's making a new 3-year high. So this is a 3-year representation of that performance. And so we're not just making a new 52-week high, we're making a new 3-year high. Chart number 3 on the next page takes a bigger dive into materials versus the S&P 500. And same principle here. Again, we're looking at a rising relative strength line. So materials are outperforming the S&P 500, both on a cap weight basis and on an equal weight basis. Both are making new 52-week highs. But what we're seeing here in particular on the equal weight side is a new 3-year high. And I'd like to bring your attention actually to the lower panel on these charts, where we're actually seeing both the red line, which is depicts that relative strength ratio, and then the green line, which depicts the relative strength momentum And both are positive, and in the case of momentum, it's turning positive. So we're seeing an acceleration to the upside. It already existed for some time on the cap weight, but on the relative or on the equal weight side, the relative momentum of relative strength is actually accelerating from negative to positive. And this is a key here. This gives us a lot of confidence that materials are just beginning their ascent, likely to new highs. So let's take a look at a couple of specific ideas in both industrials and materials. In the case of industrials, we've identified a stock that stands out to us as having a lot of potential, and that's FedEx. So chart number 4 is a 3-year weekly representation of the price performance of FedEx. And what we like about this particular chart setup is that not only has the stock broken out above a 3-year high, but it's actually made a new all-time high last week. So, we've resolved this deep base that found its lows back in March of 2020. We took out a descending trend line and have made a rather momentous move to the upside. After breaking out initially, we did get some consolidation, and oftentimes that's the case, especially after a big momentous move of that type. And what we found is the follow through from that back above the 2018 highs and breaking out above the 2020 high to make a new all-time high last week really kind of cements the idea that we're going to resolve this base definitively here. So what we're looking at here is the bullish inflection above the 305 level, having resolved both the larger degree base and the smaller degree base. And the secondary base looks like it projects up to about 375. So as long as we're sustainably above 305, we think that there's a high probability move to 375. However, once that's achieved, we think that there's even more potential. We think the larger degree base has a much higher target price to about 460 ultimately. So that's a longer term target price, but the setup looks very attractive. And we would use a stop loss at 289, which is just below the 10-week exponential moving average. Now, when we use a stop loss, we like to use a weekly closing price. So it's more of a theoretical stop loss. And if on Friday, any given Friday, we get a weekly close below 289, we would consider that stop loss executed, and we would look to exit the position. But as long as we're above that level, we feel very confident that the upside exists here, and the risk skew is quite positive, a 3-to-1 positive risk skew. So we have the potential to earn at least 3 times what we could lose, and that's based off the initial target price. It gets much greater once we are able to achieve that level and push forth to our secondary target price. So FedEx is a name that we are bullish on. We want to be long the stock above 289. Chart number 5 looks at a name that we've actually been involved with for some time, about the last month or so, as it took out a bit of a flag pattern and has now resolved a small degree base. The stock actually had a very big day yesterday, posted a new all-time high after making a new 52-week high last week. And we think the bullish inflection above 70, resolving this lateral consolidation pattern, now projects the stock up to about $90 to $91 in our view. And we're using a stop loss of $64, which again gives us that positive risk skew of 3-to-1. So we've got 3 times as much upside as we do downside. And we like the fact that this stock is actually accelerating from a momentum perspective right now, and relative strength. In other words, the ratio of the price of Newmont mining versus the S&P 500 is about to go positive. And we think that will occur this week based on the price action thus far. So Newmont Mining is a very attractive name within the materials space. We want to be long the stock above 64 with a intermediate term target of $90 or so, looking with a 3-to-1 positive risk skew. So that summarizes our work this week and our top 5 charts. If you'd like to take a look at our work further, or take a look at the report that we just published this last week, you can give me a shout by sending me an email or go to my website, jwhinvestment.com. You can also find me on Twitter at Alpha Insights, and I'm also on LinkedIn under Jeffrey W. Huge CMT. And reach out, let me know if you're interested, and I'd be happy to share our work with you. We do offer a 30-day complimentary trial of the Alpha Insights investment strategy. I'd be happy to offer that to any of the StockCharts TV viewers today. So as always, thank you very much for watching, and good luck trading.